We're not at the bottom yet. Of that, I'm sure. People ask me every hour of the day, are we at the bottom? Is it time to buy? And we're not. And the reason I say that is, let's just talk crypto markets, all crypto markets. I don't care what asset class you're in within crypto markets, what coin, what token, what asset, what project. I don't care. It doesn't matter. We're not at the bottom yet. What defines a good bottom is a panic event. Now, we've had some good bankruptcies, but they're all small. You know, yesterday's announcement, Voyager, it's irrelevant. It's so small and so decentralized in the sense that the shareholders are all over the place. And it's not really going to hurt anything. So it doesn't bring the panic bottom that you need. What defines great bottoms is panic in the streets, massive capitulation, massive selling, massive volatility, and then you flush it out. That big toilet in the sky has to flush. It's coming soon. I feel it coming. Somebody's offside, somebody's over-levered. These small guys going to zero just never knew how to manage risk because they never experienced anything like this. Now, the good news for them is they've learned. Learn, grasshopper, learn. Don't leverage yourself up like that with an asset that you can't ever peg the bottom on. So they got wiped out. So what? It's a great learning experience for them. They'll be much better managers going forward. And the shareholders, chalk it up to entertainment, no different than going to Las Vegas. You took that kind of chance with leverage, you got wiped out. Learn. That's the whole point. But the big event hasn't happened yet. It's coming to a theater near you shortly. I don't know who it's going to be. Somebody's gnashing their teeth right now. Somebody's way over leveraged. Somebody's trying to borrow cash. And tomorrow morning, you might find out who it is. I'm looking forward to that one. That's when you go back into the market, when it's absolute panic in the streets, and it will happen. Yeah, I've never been able to time the bottom. It's impossible. So I've already started to layer in primarily in equities now because, we're still not at the bottom there either because P's are still a little expensive. I anticipate if we could get down to 15 and a half P on the S&P, then you can cherry pick the top 100, highest quality balance sheets in the S&P 500. And that'd probably be a good place to put some money to work. And you'd be layering in. Nobody knows about the recession. It's pretty hard to have a recession of full unemployment, full employment, I mean. We don't have, this is not your typical recession. I can tell you that. I haven't even seen any results yet of private companies I've invested in slowing down at all yet. We can't even hire anybody. So we're in a different kind of time right now, and we'll have to see where that goes. But in crypto, you get a lot more volatility. And, obviously the granddaddy asset is Bitcoin. It's holding its own at 20,000. But if you saw that spike down in a panic sell-off, that somebody had to off their coin because they're, being margin called out, and that thing dropped to 15,000 or something, that would be a good place to start putting money to work in again. And I'm not saying it will or won't happen. It's just, we're not at the bottom yet. Of that, I'm sure. And so you gotta, hold your nose and wait and see what happens. And in the meantime, if you have a position, as I do, you just ride it out. I don't use any leverage in crypto, zero leverage. So it can go to zero and it doesn't wipe me out. Crypto is not leverageable yet. It needs to have policy and needs to be regulated. And then the volatility will go down. Then you can put on some leverage to goose returns. The guys that put on the leverage are wiped out. And every day you hear another story, wiped out to zero. You have to realize that no one knows with certainty, particularly in crypto, what's going to happen next. But we're starting to see, and this is really good in this sense. The reason I think we should all be optimistic, probably a great way to leave this, is that every time you see a company go to zero, that's a broken business model that's been wiped off forever. No one's going to do the same thing again. Everybody's going to learn from that mistake. So, I don't want to name the zeros, but you know who they are. They're happening every day now. When they go to zero, it's a good thing because that business model, that amount of leverage, that idea does not return anytime soon. And so the market gets better. And so the remaining assets get stronger. And that's, my premise. You can see all the work that Sam Bankman-Fried is doing, looking at all these opportunities, taking new positions all over the place. he's probably buying at the bottom in some of these situations. So I think it's a pretty smart move on his side. But there's a guy that understands leverage. I mean, he's been in the trading business forever. And so he understands risk mitigation. Some of these other guys forgot about that, and they're learning a very important lesson. Here's how I look at it from the perspective of working in financial services and working within the system on a regulated basis, and I have for years. Suing the SEC is a really bad idea. It virtually never works. They have unlimited resources. It's a bravado thing to do, and I'm sure others in the industry are applauding this, but the outcome is never good because they don't like getting sued, and they have tremendous powers to avoid being embarrassed. And trying to embarrass the regulator into submission, well, Pomp, that just doesn't work. And so this is not the path of least resistance. And I do not want to, comment on what they're attempting to do, other than saying, from my point of view, this is a personal opinion, it borders on insanity. It's not a good playbook. And I think if I were on that board, I would be pretty noisy in the boardroom about this. Now, having said all that, I'm more optimistic on other strategies in terms of getting some policy in crypto. And we should talk about the next 6 months, because you've got lots of evidence now of bipartisan interest in getting some policy in place. Not in a combat way by suing regulators, but in a way in cooperation on a bipartisan basis. And let's make it real easy, okay? We're not going to get everything regulated overnight. We may not get an ETF in the US for 2 or 3 more years, but that's not the only thing that matters. What I'd like to see, and a lot of others too, would take one asset, a really bipartisan asset, in the form of stablecoin. Now, not all stablecoins were created equal. We know the meltdown in Luna. That story is well known. Algorithmic-based, stablecoins may not be the best idea. Be very hard to launch another one. But assets like USDC that are backed by the US dollar have not broken a buck recently. And if that was made and was allowed to be regulated, it could become the default payment service for the world, backed by the US dollar, because everybody would use it, because so many commodities, including oil, are actually paid in US dollars. Imagine if you could use USDC to transfer between jurisdictions and geographies. It's far more efficient, better ledger, more transparent, lower cost, way faster. What senator doesn't like that idea, making the US dollar king dollar, keeping it at the supreme default currency? I don't care what party you're in, that's a good idea. The policy being proposed by the Toomey and Haggerty bills, and even contemplated in the Lummis bill, which has much more than just stablecoin. Let's just take the stablecoin. If Toomey's going to retire in January, he would endorse this if he could get it passed at the end of this year. It would be a fantastic thing. And everybody in the crypto industry, including all the institutions that don't own it yet, would see the very first marker of policy on a very basic asset, stablecoins. And contemplated in the policies, very simple: full audit every 30 days. What's wrong with that? Makes sense to me. And no assets held supporting the token or coin with a duration longer than 12 months. What's wrong with that? That looks like a money market by Fidelity or by Schwab. I've been talking about this now for 3 months, and I'm really working hard going to Washington, trying to do whatever I can as a private citizen to push that agenda. Just one thing. Let's get one thing done. And I will also note, since you and I last talked, that Fidelity and BlackRock each put in $200 million. That's a lot of money into a Series F at Circle. Now, if that isn't accommodating and supporting the notion of a regulated stablecoin, I don't know what isn't. I mean, that is as good as it gets. Those are the most conservative financial institutions in the world supporting the idea of a stablecoin backed by the US dollar.
Thank you for watching. Please press like and subscribe. Purchase your Ledger Nano X cold wallet to store your crypto and NFTs safely, link in the description.